All right. Good morning, trade pros. Welcome to our morning market update for this beautiful, what is it, Wednesday, March 20th of 2020. This is George from Trade Pro Academy. I was away yesterday. I needed to catch up on some sleep. Didn't get too much sleep, so I just, tapped out. And that's all right. We all need a day off once in a while. But we're back today. And on this morning market update, we only have a few things to talk about, really, not as much news flow overnight. And then now we're going to talk about what could happen in the market today, what we're watching for. All right, we do have some important events today, however. Starting out with this one, the FOMC meeting minutes is going to be released or are going to be released at 2 p.m. in the afternoon. All right. Now, these are the meeting minutes for the April 19th meeting where they didn't really do anything. It was kind of like a wait and see meeting or a holding meeting, as they call it, where they just held everything as is. But it's still going to be interesting to see and having a look at the minutes for some information on what the likelihood of the Fed is to add a little bit more stimulus. Remember, April 19th is quite a bit of time ago, and coronavirus situation had still been getting scarier by the day. Right now, it's sort of been accepted that, hey, it's here. But in April, it wasn't the case. Right? Things are getting worse. They're escalating. And also what their thoughts were around negative interest rates. And the reason that's important is since then, we've had a lot of Fed speakers that have said, look, negative interest rates aren't needed. Everyone's kind of echoed or beat on the same drum, as well as Jerome Powell. He's also said negative interest rates aren't something we're looking at, blah, blah, blah. Neil Kashkari's flip-flopped a few times saying we can do negative rates, we won't do negative rates, back and forth. And this is an interesting look and a chance to look at the meeting minutes while they had this meeting in April when things were a little bit more tense and what the situation was back then, how they felt about negative rates. All right. How much more stimulus they thought they could provide or when that would happen. These kind of things. It's after the fact. These meeting minutes are stale, meaning that they're not going to call this a huge amount of market movement and volatility, but they could if what's in them is significantly different than what the Fed speakers have been talking about in the last couple of weeks, all right, in the span of the last 6 to 8 weeks. So not even 4 to 6 weeks. Okay. It's going to be interesting. 2 p.m. Eastern. Expect a little bit of volatility to happen. There is a chance it gets volatile, but you got to keep your ears out for this report. If you have a news squawk, listen to it. If you want to read it after the fact when the market's closed, you can do that as well. So whatever it is, make sure you're on top of that. It's very important for the next meeting because these things happen quarterly, and when they do happen, they're super important because there's a lot of policy decisions around that. Okay, so that's at 2 p.m. This morning or today, very interesting things happening for the first time since 1986. All right, fun fact: the year after I was born. I was 1 year old at the time. The 20-year bond is coming back. All right, it's a 20 billion auction that's happening later this afternoon. Okay, and Steve Mnuchin said to Congress on Tuesday when they testified, the 20-year gives us the ability to extend the duration to raise a significant amount of funds and lock in a significant amount of very low interest rates. All right, so the idea is to collect or finance government operations because, as we know, the Treasury, and also the U.S. government's very hungry for capital at the moment. There's a lot of debt that was issued, and so they're issuing a 20-year bond, which is very interesting. He also said that he goes, while there was thought to issue a 50-year and even a 100-year bond, all right, he said there wasn't enough demand for these type of securities. And I think that's ridiculous. Who would lend money to the U.S. government right now for 100 years? That basically means you're giving your money. You're not going to get it back in your lifetime, all right? And you're going to earn a low interest rate, all right, sub 1.5% for the rest of your life. That's not, obviously, there's no demand for that. But it's interesting that they're stretching out their maturity. So now 20-year debt, 30-year debt. They're trying to lock in funding for as long as possible. And it makes sense. All right, as the national debt in the United States now stands at $25 trillion, and it's up 15% in 1 year, all right, due to this COVID-19 pandemic. And so it's going to be interesting to watch these auctions, watch the demand for them. That's this afternoon. Fixed income markets will probably have quite a bit of volatility. Key earnings on Tuesday. Home Depot is down 3%, even though it has a strong outlook. Same store sales, the SSS, was up significant, over 12%. All right, Kohl's was down 7.7%. Urban Outfitters down 4.4%. Retail just taking a big nosedive. Walmart was down 2.1%, which is pretty significant as well. Let me just turn down the news squawk. And I just moved into a new place, so I'm around stores that new homeowners especially, are around. Home Depot, Rona, Lowe's, all those stores. I'll tell you this: I don't see a slowdown in activity. I see people lining up. I had to wait in line to get in to get something I needed. I think this demand is being throttled back. Right? I also read some interesting reports this morning that the CARES Act in the United States, providing $840 weekly to people, is preventing retail stores from getting people to work for them. They're saying, look, there's 20% unemployment. I opened up the retail store and I expected thousands of applications. None of them came in. The truth is, right now, it's, if you're working in a retail capacity, you're earning the equivalent of $22 an hour. You're being paid to stay home. All right. So once this CARES program sort of lapses and once everyone is ready to get back to work, I'm expecting a massive boom. I can see it firsthand the way we're being throttled back for the purchases. I can't get things that I want to. Cash in hand, there's stores that are closed that I can't purchase things. Now it's getting a little bit more desperate. So I got a kid on the way, so I got to buy certain things, etc. Amazon times are delayed, and if you want to go in-person shopping, all right, it's artificially being closed out. All right, and when it resumes, it's going to resume with a bang. And you can see the S&P 500 has already started to price that in. All right. Today's markets in Asia, Japan's up 0.8%, Hong Kong's up 0.1%, China's down 0.5%, India's up 2.1%, and Europe at midday, London's flat, Paris is flat, so is Frankfurt. So European markets aren't really too volatile this morning. In the U.S., however, futures are up almost a percentage point across the board, Dow, S&P, and NASDAQ. We've seen this often in the last couple of weeks, strong upside in the overnight markets, all right, and then sideways consolidations to light sell-offs in the U.S. sessions. That's been the trend. Of course, now that everyone knows the trend, it's probably not going to work, but that's what we see. We see a rally overnight, we're pressed up against resistance, and we pull back early in the morning. Today, we're going to try the pullback trade again. All right, we are at the top of a huge resistance on a daily chart. If you pull it up, you could see it. We failed there already, and I think we could be in the market for a little bit of a pullback. Early morning, I'm going to look to sell some rallies, and then the afternoon to late morning around the reversal hour, you look to start buying some dips. But then we get a little bit of pullback. We're opening pretty strong on overnight session. And you know what that means. It's just time to pull back a bit. Why do markets go up in overnight sessions? Because it takes very little volume to move them. And so if somebody's buying with an absence of sellers, they're going to have to pay more. You can't buy something if no one's willing to sell it to you. And so overnight, we're getting quite a bit of a bid higher. It's been an interesting trend to follow. I think it follows today as well. All right, crude oil is up 0.4% this morning. We have in the crude oil market, we have our weekly inventory report. Yesterday was a draw. We had one heck of a trading report. Our oil desk manager, Steven, cleaned up, and so did our oil team. And I'm happy to see these reports working. All right. Yesterday on the API, American Petroleum Institute, these are the private numbers. All right. We had a draw of 4.8 million barrels the first time, or versus an expectation of 1.2 million build. That was bullish. So markets have factored that in. They rallied quite a bit. We almost hit $33 a barrel this morning. Let's see, are we at 33? Overnight high is not 32.85, 15 cents shy of the 33. All right, depends on what contract you're looking at too. That's the July. All right, gold flat, Bitcoin flat this morning. We have at 10 a.m. quarterly services report, the advanced numbers. Not a hugely important report, but watch out for it anyways. 10:30, we have oil inventories. 1 p.m. results of a 20 billion 20-year note auction for the first time since 1986. That's going to be historic and important to watch at 1 p.m. And then 2 p.m. we have FOMC meeting minutes. All right. Start out the morning looking for a little bit of a pullback, and then decide what you're going to do about it when you hit your key support levels. I love you guys. Be safe out there. Be cautious. Have a great rest of your day. We're going to open up the trading room with oil, and then we're going to get into equities as well. Set some levels, do some trades. I'm back. I missed a day yesterday. And I got to tell you this. When you miss even one day trading in the market, you feel a little bit off, right? But we'll get back to top form within the minutes of the open. Love you guys. Have a great day. Be safe. Ciao. All right. Later, YouTube. Love you guys. Consider joining a trading room so we can continue the discussion there. We got a lot of trade setups ready to go. I got some levels planned myself. Let's get this. Boxy.